Hello student, welcome back to online lecture on junior accountancy channel. Student, today we solve the 8th practice problem of the partnership final account, which is available in your textbook page number 60, and now it is available in front of you. Now, first of all, we read this problem. Nana and Nani are the partners in partnership firm sharing the profits and losses equally. You are required to give the effect of adjustment in profit and loss account and balance sheet with the help of the following information. Student, from this information, we understood that there is a two partners in partnership firm whose name is Nana and Nani, and they share their profits and losses equally. And here they asked to give the effect of adjustment in profit and loss account and balance sheet only. It means here we have to prepare the profit and loss account and balance sheet of this partnership. Okay, for that purpose they provide the trial balance for which date is 31st March 2019. It means 18 and 19 is financial year. Now we read the first of all the debit balance list. First is insurance, 15,000 amount is there. Then land and building is given amount 50,000, but they gives the additional information regarding that. What is that? Addition of rupees 20,000 with effect from 1st July 2018. Student, from this information we understood that the value of this land and building, which is 50,000, it includes the 20,000 of land and building. That 20,000 land and building is purchased in 1st July 2018. It means here total that 20,000 amount of land and building is used in this financial for total 1st July to 31st March. It means total 9 months we use that land and building, and remaining land and building, that is 50,000 minus 20,000, so remaining is 30,000 land and building which is used in full of the financial year. So here this information helps us to calculate the depreciation on that land and building. So on 30,000 there is a as per the 12 months we charge the depreciation, and on 20,000 land and building we charge the depreciation for 9 months. Okay, next salary is 5,000, export and duty 2,500, interest 1,000. That interest is paid, so expenditure is there. Then furniture 40,000, debtors 26,000, and total of the debit balance is 1,39,500. Now we see the credit balance list. Capital account of Nana 50,000, capital account of Nani 50,000. Next item, that is a 10% of a bank loan taken on 1st October 2018, and amount is the 30,000. Student, from this information we understood that here the bank loan is taken in this financial year, that is 30,000, but that financial loan is taken 1st October 2018. So total October, November, December, January, February, March, total 6 months interest we have to charge. So for that purpose the rate also given, that is 10%. So in this bank loan we have to accrue or calculate the interest on that bank loan. So how it is calculated? 30,000 into 6 divided by 12 months into 10%, so we get the 6 months interest, that is 600, that we first of all added in the balance sheet liability side in bank loan, and second effect of it we show in the profit and loss account debit side, we show it as the interest on bank loan, so it is a financial expenses, that's why. Next item is the interest, that is a 1,500. That interest on the credit balance list is given, that is the interest received, that is the income. So profit and loss account credit side we recorded it. Next and last bills payable amount is 8,000, and total of the credit balance list is 1,39,500. It means here tallied trial balance they provide us. Now we just read the adjustment. We know that every adjustment has the two effects. Okay, so we first of all read the adjustment, and simultaneously we put a tick mark before the adjustments relating to the related to the trial balance item. So first adjustment, there is a gross profit amount at rupees 34,500. From this first point we understood that here only is the just information regarding the gross profit. We show it in the profit and loss account credit side. Then second adjustment that is the insurance paid for 15 months with effect from 1st April 2018. Student, here the insurance is given to you in our trial balance. So what is the insurance amount in trial balance? That is a 15,000 है ना. So here there is a adjustment regarding the insurance, that what there is a 15 months of insurance is paid with effect from 1st April 2018. It means there is a prepaid insurance is there. Total in full of the year 12 months is there. So 12, 13, 14 and 15, it means 3 months insurance is prepaid. So we have to show the effect of this. First effect in the deducted from the insurance as a prepaid insurance, 3 months insurance we have to calculate here. How it is calculated? Insurance amount is 15,000. So 15,000 into 3 divided by 15. So we get the amount of 3 months insurance premium. So we deduct it from that insurance, and second effect of it we show it in the balance sheet asset side. Okay, so two effect we understood. So this, from this information we understood there is a prepaid insurance is there, and we put a tick mark before the insurance in trial balance. Now next adjustment, there is a third point: depreciate the land and building at 10% per annum and furniture at 5% per annum. Here there is a adjustment regarding the land and building and furniture also. So there is a depreciation we have to charge on land and building and furniture. So we know the effect of that. First effect in the balance sheet, and second effect profit and loss account debit side. Next adjustment, that is a fourth: write off rupees 1,000 for bad debts and maintain the RDD at 5% on sundry debtors. So here there is a bad debts in adjustment and RDD in adjustment. So it is, there is a debtors related adjustment is this. So we put a tick mark before the debtors in trial balance. Okay, so we know the all effect of that. First effect, balance sheet. Liability side, we first deduct the bad debts in adjustment from the debtors, then we, on balancing amount, we calculate the 5% RDD. So both the effect is shown on the profit and loss account debit side. Okay, now last adjustment, there is a closing stock is valued at rupees 34,500. Here there is a closing stock is valued, so it's one effect we show in the balance sheet asset side, and second effect we already know that it is shown in the trading account credit side. But student, here in this problem we prepare only the profit and loss account and balance sheets. So here we show the one effect of this in balance sheet asset side. So student, here our reading is completed. Now we try to solve in next slides the problem number 8. Okay, hello students, now we solve the practice problem number 8 of partnership final account. That's purpose we prepare the profit and loss account for the year ending 31st March 2019 and balance sheet along with the partners capital account in the books of Nana and Nani. So format is available in front of you. So we first of all post the trial balance items in final account. First is insurance 15,000 that we recorded in the profit and loss account debit side to insurance inner column 15,000 because adjustment is regarding the insurance. Next one is the land and building, that is a fixed assets. So balance sheet asset side we recorded in inner column 50,000 because adjustment is regarding the land and building. Next item, that is the salaries, it is official expenses. Profit and loss account debit side we recorded it as a 2 salaries, outer column 5,000. Here there is no adjustments. Next, export duty, then same in profit and loss account debit side to export duty below the salary amount is 2,500. Next item, that is the interest, that interest is the expenditures, financial expenditures of profit and loss account debit side we recorded it as a to interest directly outer column 1,000. Next item, furniture, it is a fixed assets, balance sheet asset side inner column we recorded because we have to charge the depreciation on that. Last item, that is a sundry debtors. So there is an adjustment regarding the debtors. Inner column, in balance sheet asset side we recorded the amount of debtor, that is a 626,000. Okay, here the debit balance list is completed. Now we record the credit balance list. First is given the opening balances of the capital of Nana and Nani. Partners capital account credit side we recorded it as a by balance brought down. Nana's capital is 50,000, Nani's capital is the 50,000. Okay, next item, that is a 10% bank loan taken on the 1st October 2018. Here there is a hidden adjustment is there. So here we have to calculate the interest on the bank loan. Okay, we they gives us the date. So from 1st October to 31st March we have to calculate the interest on that. How it is calculated, the working note is available in front of you. Interest on bank loan, total amount of bank loan is 30,000 into 6 months divided by 12 months. Total 6 months is there, 1st October to 31st March, into 10%, it means 10 divided by 100. So we get the amount of interest, that is a 1,500. That interest on loan we added in the balance sheet liability side, that is a 1,500. Total of the bank loan now it is a 31,500. And second effect of it, it's shown in the profit and loss account debit side. You can separately show it in the profit and loss account debit side as a 2 interest on loan 1,500, or you can add in the earlier interest, that is 1,000. You can show in presentation interest 1,000 plus interest on loan 1,500, and you can take the total in outer column. But here in these slides we show the interest on loan as a separately 1,500 in profit and loss account debit side. Here the hidden adjustment, both effect we shown in the final account. Next, that is there is a interest. Interest, it is a income, so it is show it in the profit and loss account credit side by interest amount is 1,500. Last item, that is a bills payable, it is a current liability. Balance sheet liability side we show it in the liability side as a bills payable 8,000. Here student, our trial balance posting is completed. Now we slowly give the effect of or show the effect of adjustment. Here first adjustment, there is a gross profit amounted rupees 34,500. Just informations, we know the effect of gross profit. First effect we show it in the trading account credit side, and second effect of it we show it in the profit and loss account credit side. So here we not prepare the trading account, only profit and loss account we prepare. So we show the effect of this in profit and loss account credit side as by gross profit amount is 34,500. Second adjustment is insurance paid for 15 months with effect from 1st April 2018. It means 15 months insurance we paid here. So total year there is a 12 months is there. So 3 months insurance premium is prepaid. So how its effect is shown, profit and loss account debit side we recorded or we deducted from the insurance as a prepaid. Prepaid amount is 3,000. How it is calculated? The working note of it also available. Prepaid insurance, total amount of insurance is 15,000 into 3 month divided by 15 months. So we get the 3 months prepaid insurance, that is a 3,000 that we deducted from the insurance in profit and loss account debit side. Okay, so balancing amount is 12,000. We show it in the outer column of the profit and loss account. Student, here the second effect of it we show in the balance sheet asset side, because the prepaid insurance it is a current assets. Okay, so asset side we show it as a prepaid insurance amount is 3,000. I hope your concept is clear. Now the third adjustment, there is a depreciation on land and building at the rate of 10%. We know how it is calculated. Student, here only we directly show the depreciation amount of rupees 4,500. How it is calculated? The effect of its the working note related to the depreciation on land and building is available in front of you. How it is calculated? Total land and building is 50,000. Okay, from that 30,000 land and building we used for total full year, so we calculate the depreciation for full year. How it is calculated? 30,000 into 10 divided by 100, so we get the depreciation on 30,000, that is a 3,000. Okay, and the remaining amount, that is a 20,000, that we purchased in the uh, 1st July 2018. So total 9 months depreciation we have to charge, because this land and building of rupees 20,000 we used for 9 months, so we depreciation also charged for 9 months. How it is calculated? 20,000 is equal to 20,000 into 9 month divided by 12 month into 10 divided by 100, so we get the depreciation for 9 months on 20,000, that is a 1,500. So 30,000 3,000 plus 1,500, total depreciation on land and building rupees 4,500. So total depreciation you can directly show it in the balance sheet as a minus depreciation 4,500, or in presentation you can separately show it 50,000 minus 20,000, remaining is 30,000, or you can separately show the depreciation on that land and building, or combinedly you can show the depreciation as rupees 4,500. And balancing amount of land and building, it show it as 45,500. Okay, I hope your depreciation concept is clear. Okay, then similarly there is a depreciation on furniture is also there. Total depreciation on furniture is 5%. How it is calculated? 40,000 into 5%, that is a 2,000 amount of depreciation we calculated. We deduct it from, first of all, from the balance sheet, so we get the balancing amount of furniture, that is 38,000. Second effect of it, we show it in the profit and loss account debit side. Okay, so profit and loss account we show the depreciation of land and building also and furniture also. Land and building 4,500 and furniture 2,000. Okay, the total depreciation is 6,500. Next, fourth adjustment, there is a write off rupees 1,000 for bad dates. Okay, here first of all we deduct the bad dates, that is the bad dates in adjustment from the sundry debtors. In balance sheet asset side we show the first effect of it. We deduct the new bad debts of rupees 1,000, so we get the balancing amount of rupees 25,000. Yes or no? Then on that balancing amount we calculate the RDD in adjustment, that is a how much percent? 5% on the sundry debtors. It means 5% we calculated on 25,000. How it is calculated? 25,000 into 5%, so we get the amount of RDD, that is 1,250, and balancing amount of debtor is 23,750. And both the effect, second effect of these bad debts and RDD we show it in the profit and loss account debit side. How it is shown? In debit side, two bad debts we take the, here there is no bad debts in trial balance and RDD in trial balance, so we just put a bad debts in trial adjustment and RDD in adjustment. We take the total of both the items and record it in outer column, amount of rupees 2,250. Here there is a working note also show to you in the slides how it is calculated. 26,000 total amount of debtors is there. We deduct the bad debts in trial balance, that is 1,000, so we get the amount of rupees 25,000, and on 25,000 we calculate the 5%, that is 1,250. I hope your concept of fourth adjustment is also cleared. Now next and last adjustment, that is a fifth. Closing stock is valued at rupees 34,500. Closing stock amount they gives us it, that is show it on the profit balance sheet asset side. It is a current assets amount of rupees 34,500. Second effect of it, we show it in the trading account credit side. But student, here we cannot prepare the trading account, because in your problem they only ask to prepare the profit and loss account and balance sheet only. Okay, so here only one effect of it, we show effect of closing stock, we show it in the balance sheet asset side. Here our adjustment effect is also show it in the profit and loss account and balance sheet. So now closing time is there. Gross profit we already know, so there is no question about the trading account closing. We close the profit and loss account. First of all, how it is closed? First, we take the total of debit side and credit side. Here we find out that the credit total is more than the debit total. Okay, so here we get the net profit or the credit balance of the profit and loss account. We called it as a net profit. Total amount of net profit is 5250. That net profit we divided or distributed between the partners. In which ratio? Of course equally. So Nana's profit is 2625. Nani's profit is 2625. Its second effect we show it in the partners capital account. Partners capital account credit side as by net profit. Nana's column 2625 and Nani's column 2625. Okay, and afterwards we take the total of profit and loss account. So total of profit and loss account is 36,000. Now we close the partners capital account. Here we see that there is nothing is recorded in debit side of the partners capital account. So first of all we close the Nana's capital account. Credit total of the Nana is 50,000 plus 2,625. That is a total of credit side is 52,625. So it is a closing balance of the capital account of Nana. So we show it in the debit side as to balance carried down. Nana's column 52,625. Then we close the Nani's capital account. Here also there is nothing item is to be recorded in debit side of the partners capital account. So of course credit side is more. The total of credit side is 52,625. That is a closing balance of Nani's capital account. So we recorded in debit side to balance carried down Nani's column 52,625, and then we take the total of capital account. Both the accounts total is 52,625, and the closing balance of this capital account we show it in the balance sheet. Liability side, partners capital account Nana's capital 52,625, Nani's capital 52,625 recorded in inner column, and we take the total of both the capital account. The total we write it in the outer column of the balance sheet. That is total is 1,05,250. Then afterward we take the total of balance sheet. So here we see that the liability total is 1,44,750 and assets total is 1,44,750. It means here our balance sheet is tallied. So here our practice problem number 8 is completed. So here student, in your homework you try to solve this problem again with the help of trading account also. Okay, thank you.